Mic check, mic check. Hey, good morning, everybody. Check, 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 check. Can you hear me okay? Can you see the screen okay? All right, let's see who we got in here. Andrew, welcome in. JC, JK, welcome in. King Thomas, hello. Ocean Alexander, good morning. I'm seeing the same usual suspects here. Simon, Jeffrey, good morning. Good morning, good morning, good morning. All right, let's get into the watch list building for today. I haven't done anything. I opened up my charts and I was already on Amazon, so we know Amazon's going to make the watch list, but beyond that, I haven't looked at anything else. So this is going to be a really raw session, not a polished one, just a really raw session of us building out this watch list together. All right, we'll start with SPY. Yeah, so here's the deal. All of these dips on SPY, I'm going to the daily chart here. All of these dips on SPY down to this area at 675, every single one of them for the past 2.5 months has been bought. And it seems like under this current administration, anything crazy that happens in terms of like geopolitical tensions that may cause the market to drop, i.e. tariffs or perhaps a war with Iran, all of these drops down seem to just get bought right back up. And so I'm not surprised to see this market not breaking this support. I'm not surprised to see it. But what I am slightly confused about is that you would think that all of this uncertainty going on just around the world in general would cause this market to drop. So I'm not sure if in my mind it makes sense to be going long, but the charts from the past 2 trading days have told us that we should be looking to be bullish. We should be looking to go long for a continuation. So that's the perspective that I'm coming into the market with today. So we start with SPY. This is just going to be a continuation watch, and I feel like a lot of the names on the focus list from yesterday are going to be a continuation watch. It is a slight gap down this morning. So normally I would look towards the PDC for a red to green move, but there's a resistance right above the PDC at 686 and 687 with the overwhelming resistance placed at 687. And so we can just make this very simple. SPY should be a long idea for a continuation trade. Top side above $687. So that's going to be our long level there. All right, the short level, this gets a little more difficult. We have to be careful with this because we don't want to set an aggressive short level in a market that feels like it's somewhat bullish right now, right? And we're just talking recently bullish. So we got to be careful with how aggressive we set this, but here's what I like to utilize. The downtrend trend line break strategy and the uptrend trend line break strategy. Since SPY currently is moving up, we're going to connect this low of the dip, recent dip, to this low, to this low, to this low, so every move up, all these higher lows, we're connecting this, and it's not going to touch every point perfectly, but you get the idea. When we zoom out, that is an upward channel with higher lows and higher highs. And so my thinking is, if we rallied this all the way back to this peak, this almost looks like a bear flag, right? It could be a trade that is just rallying against the prevailing trend, which recently was down off of the all-time high area. So if SPY then breaks this uptrend trend line, so we don't have to worry about this one or this one, that's just shaping the whole formation out. But if SPY were to break this uptrend trend line and start to make lower lows, then we could be bearish on the overall market. So that would mean that SPY's most recent higher low would be here, but that's kind of pretty close to where SPY is currently trading at. So this does not make sense for us to go short at 682. It's too close. I need to give this some flexibility. So we're going to go off of the next higher low, which is going to basically be yesterday's low of day. So it doesn't always work out this way, where I'm essentially just straddling yesterday's price action, yesterday's high and yesterday's low. It's not always that cut and dry. It just so happens that the levels that I am placing are at yesterday's high and yesterday's low, but you see that's not the only thing that I'm going off of here. So the short levels for SPY is going to be $680. And then we're going to grab our Discord server here. and go to the day trade watch list channel. I posted a focus list yesterday, and I always will post the focus list for you at the end of day. And the reason why I do this is because I want you to chart these out. When I'm posting these focus lists in the afternoon, I'm not doing that for my health. I already know what I'm going to be watching going into the next day. I post this publicly for you so that you can take the time and go chart these out on your own and just see if there's any setups out there that you like and also get practice with it, right? So Amazon, I've already put this on the list. Amazon, we're going to come back to Hood, but Amazon is the next one here. This is easy. It's just a continuation watch. If you remember my analysis that I posted over the weekend, I said Amazon, look, on the daily has this range that it's forming, right down here. And on a break of this range, what did I say? On a break of the range, we get a gap fill topside. Well, there's still gap to be filled topside up to $220. So that leaves us profit margin up to that 50 and 200 EMA if we were to get a continuation up on Amazon. So I'm not looking to take Amazon short today because it's not breaking down from this range, and it's bullish. It's breaking out. If we were to go short anyways, what will we be trading into? The gap, the range, right? We don't want to be trading into consolidation. That doesn't make any sense. So what makes a better idea here for us? Trading into no resistance, which is the gap. So that's what we're going to look for on Amazon today. Very easy analysis here. It's just a continuation watch. You can either go long at 217 given, why did that zoom out? You can either go long at 217 given the slight gap down this morning. So this would then become a red to green move on the reclaim of that PDC. The problem with going long at 217 is that you risk Amazon rejecting 217.5, which it did twice yesterday. And that is the proper bottom side of the gap. So if you need to get all the confirmation, your long idea is 217.5. If you want to be aggressive on this, long at 217. But the idea here, no matter what we do, the idea here is that if it runs, it needs to hold above this level at 207, just under 217, that previous day's closing price. So your ultimate stop loss here could be, 216.75, for example. But on any move, whether it hits 217.5 and rejects, or whether it blows right through that and runs to 218 plus, on any pullback, it should hold that PDC as support. That is the move, ideally, that we're looking for here today. So however you want to run it, long at 217 works. If you want to be slightly aggressive, long at 217.5 works if you need all the confirmation. I tend to lean more towards the conservative side when I'm setting these levels. So Amazon long at 217.5. And the analysis here, the comments section is just going to say it's a continuation watch for the gap to fill topside following the range breakout on the daily. If I can type without mistyping. Continuation watch for the gap fill topside following the range breakout on the daily. Easy. All right, Hood. Next one on the watch list, similar setup, though, the problem with this is that the gap on Hood has mostly been filled. Right, the rally up yesterday. It's almost the same exact setup as Amazon. You got a sell off into a range breakout, and then overhead was a gap to be filled. Well, the gap has mostly been filled from yesterday's price action, and then we go to the 5-minute time frame, and you actually this does not count as a gap fill. I know you might think it does, but gaps are found on the daily time frame, and if Hood were to open up right now where it's at, this gap is still valid here. So you could run this. Here's what you could do. Because that gap, it fills what we say like 80. It's very small. It's like 85 or 85 point. Let's look. Let's make sure that we're right here with this. So this gap fills at 85.16. Okay, so basically 85.2. So back to the 5-minute time frame. So your profit margin is going to be up to 85.2. That's going to be your first point of resistance. I wouldn't feel comfortable taking this long until 84 if I were to be aggressive on this. And then from 84 up to 85.2, which is your total gap filled. I mean, it's possible to make something happen here. 1.5%. It's tight. It's really tight, but it is possible to make something happen there. So there's two ways to run this. This is what I'm looking at. Number one, we look for the continuation gap fill. It's going to be a break above yesterday's high of day. We're not worried about the pre-market price action or peaks because that doesn't count as the gap fill, right? So for the gap fill continuation, long above 84, for the run to 85.2 to totally fill that gap. This is really close to the current trade price, but it could work because not only would you be getting an entry at the gap area, the start of the gap area, the remainder of the gap area, but you'd also be getting a break of this downtrend trend line. So Hood would probably, honestly, I don't know if this is going to work for us, but Hood would probably do something like this, like an opening run and then a pullback hold and then a go. I think that's probably what you would get. The problem with that after the open is that on this first move up, it fills the gap, and then that takes away the whole trade for you. So that's one way to run it, is to be aggressive at 84. The other way I see to take this trade would be 85 or 85 and a half, right? But then you start to look at this as, well, if you're going long at 85 and a half, that's already a 2.5% move on Hood, and you would kind of feel late to the trade. So I said just recently with the Amazon level that I do tend to lean more towards the conservative side when I'm setting my levels, which you would think would be up here. But the problem with that conservative level is that it's too far away from the current trade price. So I think that we could take advantage of this. It's going to take some navigating, but that's why I trade live, because we can navigate this together. It's going to take some navigating, but I think that we can go long on Hood above 84. Now, the caveat here is that it absolutely has to hold up above this PDC. Hood cannot break below 82. If it does, that's going to invalidate our long idea, and then we would actually start to look to take it short. Probably not under the PDC, but this area below at, hold on, let me go back to the daily. Not this area, but from 80 down to, look, this is another gap, right? From 80 down to 77.5 roughly, that's also a gap. So you've got a gap overhead and you've got a gap below. So back to the 5-minute time frame, this would be a situation where it would make sense to straddle the price action from yesterday at 80 and 84, your yesterday's high and yesterday's low area. That this would make sense to set your levels straddling that price action, looking for either the higher high or the lower low. And then there's a gap on both sides. So short at the PDC doesn't make sense here. It's too close. Long at 84 is very aggressive. We're going to do this. We're going to take it long at 84 with the understanding that there is resistance at the pre-market high as well as at the top side of the gap at 85.2. And then we'll look for the break below 80 for the gap fill below. I don't know that that's going to necessarily be in play, but who knows? Hood has done crazier things before. Now, I get this question quite a bit. Yesterday, we were able to scale out. Right when we took the Hood trade, we were able to scale out of this trade. We took profits at 20%, then we took profits at 40% on the way up. And I get this question where people ask, Gates, how do you know when you're in a trade to sell all of your position at 20% or to sell only a portion of your position at 20% and hold a little more for 40%? And my answer is simply, when the profit margin is still there and allows for more, that's when you would scale out. Otherwise, if you're hitting your resistance on the trade and you're just up 20% on that resistance, that's when you would close the entire position out. So an example of that would be right here. We know the resistance is 85.5. We know the end of the gap is 85.5. If we take this trade at 84 and it runs to 85.5 and we're up 20% at that resistance, this is a situation where that profit margin that's it. That's the profit margin we're offered. This is a situation where you would take the full 20%. You would take your whole position off, take all the profits. There is no scaling out of this because we're already hitting that resistance. This is the trade that we're looking for, right? Yesterday was different because this gap on hood ends way up here, and we got 20%. After we took this trade, we got 20% here. So there was still this amount of profit margin from here all the way up to the end of this gap. There was still all of this profit margin left. So if we take our if we get 20% offered here and we still got all this profit margin up there, that means that hood still has potential to run. This would be a situation where we scale out, and that's exactly why we scaled out. So it's a different situation, but I need you to make a mental note of that. Because I get asked that question, how do you know when to scale out versus when to not scale out? All right, let's put this on the list. So hood, whoops, all caps here, hood, long over 84, short below 80. We're going to say looking for an outside day. An outside day just means a day outside of yesterday's price action. An inside day would mean that hood stays right here in this zone. We don't care to trade it if it stays in this zone. We do care to trade it if it breaks out or breaks down. So an outside day is what we're looking for. So we're looking for it. That's why the comments looking for an outside day to either side to fill the gaps above or below. That's it. That is the analysis there for hood. Up next is Nvidia. Nvidia, however you say it. Yesterday, long idea at 184. You did get a break of 184. I had to count this as a loss because you do get the break of 184. You do get the hold of 184, and then just no further high of day beyond that. So while this could have been scalped, realistically, I don't think that offered enough profit margin for anybody to take profits on that. Maybe it did, maybe it didn't, but I think I just counted this as a loss on the watch list results yesterday. You know, I try to keep those results as honest as possible. So with this peak up here at 184.5, I wouldn't feel comfortable going long at 184 anymore, even though it's a gap down day. We maybe could go long at 183, and you could look for a break of the downtrend trend line. You know, you're just limited on profit margin because who knows if this breaks that PDC and breaks the downtrend trend line, does it reject at 183.5? Right? Would it do this? Does it do this? Or does it do this? We don't know. At this time, there's no telling. So the safest thing to do here would be to go long at 184.5 to look for a proper higher high outside of this consolidation zone right here on the daily time frame. So Nvidia long above 184.5, though it feels kind of far from that price point too. That's 1.6% away. So this doesn't feel like, this is a maybe. This doesn't feel like immediately something that I'm like, yeah, we should put this on the watch list. So I'm going to put Nvidia as a side chart item, just as a placeholder for right now. We'll say Nvidia over 184.5, and we're going to put some question marks behind it. Let's go through the rest of our focus list because we have quite a bit of opportunity here. Let's go through the rest of that, and then we'll revisit the Nvidia idea if we don't find anything better. Apple. This actually looks bearish to me. So yesterday, the overall market was pretty bullish, right? Apple actually gives you this formation here is known as a bearish engulfing candlestick. This is really important. You've got quite a few things going on here. Number one, you've got multiple rejections at the 50 EMA. That's that green dashed line. We're on the daily chart time frame. So that 50 EMA is going to act as a dynamic point of resistance. You've got 1, 2, 3 days of rejection at the dynamic point of resistance. That's the first thing. Number two, you've got a range. All of this is a range, right? We could argue this is a static line of resistance. Now you've got a static line of support at 260. So number two is you've got a range being formed. Number three, you've got the bearish engulfing candlestick. That's what this candle is. So we're looking at the bodies of the candle right here and right here. We're not looking at the wicks. So if the body of this candle totally engulfs the body of this candle, this is actually a bearish reversal. This is a bearish formation. candlestick right here. So it'd be looking for the lower low on this, not a higher high. So this doesn't look like something that's a bullish breakout of this range. It's looking like a bearish. And then number four, the fourth thing I would look at is that, well, the overall market pushed yesterday, right? We would argue that the majority of the market was green. Why was Apple not green? Why was Apple not pushing? So it's showing relative weakness. That means if we see a market that is selling off today, or maybe even if we don't, Apple still looks bearish to me. So the support point at 260 is very clear. We go to the 5-minute time frame. Apple's not trading far off from 260. I'm looking for a break of all of this consolidation, a break of that static support. It's a short under 260. So let's go ahead and put this on the list. Apple below 260. Up next is Microsoft. Microsoft, MSFT. Yeah, so this originally was a bullish continuation idea. Kind of reminds me of the setup on Hood and on Amazon, where you have a stock that is sold off, found some support, started to kind of range trade, though I wouldn't argue that this is a range. It has started to make higher highs here and higher lows here. So what makes sense to me on Microsoft today would be to look for, go back to the 5-minute time frame, would be to look for higher highs, which would be a break of 411, right? We can clean this up because I know that there's a lot of lines here. So if we're looking for the break of 411, ideally we would want this opening up just under 411 because that would be the easiest way to run it, right? Where if this was opening up at 410, boom, break of resistance, we can just run it. With it gapping down this morning, not only does it need to recover and break the PDC, but it also needs to break all of this pre-market resistance. So it needs to break the PDC, then it needs to break the pre-market resistance, then it needs to rally all the way up to yesterday's high, breaking all of this other resistance. It needs to break yesterday's high of day resistance, and then it needs to continue to go for us to take a trade here. Could it happen? Yes. Is it likely to happen? Probably not. So I think that we remove Microsoft from the list, and you always want to think in terms of percentages too. How far of a move actually is that before we would even take the trade? It's a 2% move before we would even take our entry, that's a big move for these large cap stocks. They typically move between 0 and 3%, maybe 4% on a good day. You would need this to run 2% before you even take an entry, and then you would need it to run even further for you to profit off of that trade. So I don't think that this is very likely to give us what we're looking for today in terms of a continuation. If it does rally, great. We can miss that move. Who cares? Because that would set us up then tomorrow just for the break of resistance, which is the only thing that we were really looking for today anyways. You know what I mean? I think by the time this does get here, if it does make this move, buyers are going to be exhausted and you're going to see a pullback anyways. So Microsoft over 411 looks good eventually. We'll set an alert there, but not today. So we move on. Netflix. Netflix, next one on the watch list. We did get the break of the static resistance at 98. We did get the run to 100, 99.75. It was a quarter off, so 25 cents off. That I would just say that ran to 100, close enough. And today we should just be looking for the continuation, which should be a break of 100. And the same thing here on Netflix, we have the same issue as what we have on Microsoft, which is the gap down this morning has pulled it out of play. It's a 2% move up to 100. It doesn't feel like it's likely to get to 100. And even if it did, buyers would probably feel exhausted. You'd likely see a rejection and probably not the break and follow through that we're looking for. So we're going to set an alert at 100. That is a line that likely will be in play later, maybe tomorrow, maybe next week, but probably not today. So we're going to skip Netflix and move on to Meta. Meta, okay, same deal, right? So now we're starting to see a theme where we had this bullish run yesterday and the pullback in the pre-market has kind of taken the bullish run or continuation out of play. But This one is a little different than some of those others because this I would look at as so the static resistance is at 660, right? We can see that. This is a range. You got to break at the downtrend trend line into consolidation and then a range breakout top side. So you got to break at the 50 EMA and a reclaim of the 200 EMA on the daily. A lot of times what will happen when you get a breakout of this static point of resistance, a lot of times what will happen is that you get a pullback to retest that resistance before the next leg up. So Meta is different in that it is retesting the resistance there at 660. The new resistance should flip to new, the old resistance should flip to new support. And you've got to break a very clear downtrend trend line here, right? With high, lower high, lower high, lower high. So I don't mind this actually as a long above the previous day's closing price, which would be 668. And then we can look for the run up to 672. So we can look for this move here today. I don't mind that as a trade idea, and I think that that's what we're going to go with. So long at 668 with the understanding that we have resistance around 673. We got to be careful because this is somewhat limited on profit margin here. It's less than 1%, 7.75% roughly. So we got to be careful of that. Let's put this on the list right now, and then I think we'll do a placeholder just like we did with Nvidia and see if we can find anything better, because I wouldn't mind replacing this with something else if we find something else. But this certainly looks, Meta certainly looks better than those other two names, Microsoft and Netflix that we just analyzed. So it goes Meta over 668, put a couple question marks there. I don't care to take this short. I'm not looking for this to sell off today, because if it does sell off, it's only trading back in the range. I'm not trying to trade this inside of the range. I want to trade it if it's going to give us the continuation outside of that range. All right, AMD, next one on the list. Yeah, this is just a continuation watch. You have a couple of things going on here. First of all, big solid run yesterday. Very nice move up. On the daily time frame, you've got a bounce off of the support area, which if we pull this line back, that makes sense, right? Bounce off the support area, as well as a bounce off of the blue line, which that's your 200 EMA, right? That's that dynamic line of support on the daily. Break of the downtrend trend line here, and the reclaim of the $200 whole number, which is going to be right there. So a lot of things happening. You got to bounce off the static support on the daily, bounce off the 200 EMA on the daily, break of the downtrend trend line on the daily, reclaim of the $200 whole number. That's 4 confirmations for us to take this long for a continuation trade idea today. And with the gap down this morning, we can't go long at 200 because the previous day's closing price is at 202. But this is a strong close. This stock ran all day long and did not sell off until the pre-market session. So I like this over 202. And I do like this better than Nvidia and Meta. So this one is for sure going to be on the list. AMD over 202. There's no question about it. Up next is PLTR. Another one where we should be looking for a continuation on this. The daily time frame, you had 2 days of rejection here and here at the same area, and then yesterday's gap up just underneath the 150 hold number. All that we were looking for was a break of 150. You get a break of 150 right at the open. Perfect pullback retest of 150 before the run higher. This is really solid price action here. So going into today, this should, in the bullish scenario, this should hold up above $150 without a doubt. I don't know that I would be looking to take that short at all, but if you were, maybe under 150. And then our long idea, I like the long at 154, but I'm seeing multiple peaks above 154, 1, 2, 3, 4 times where it rejected just above at 154.5. So if I were to go long on this, it would be 154.5 for the continuation top side. And I think, let's look back at Nvidia. I was going to say I think that this setup looks better than Nvidia, but Nvidia can make big moves. Like if it's going to reverse, it can make big moves. Maybe this feels better than Meta. I don't know. let's just set it on the list, and we'll make a decision here in a minute about what we're going to do with it. So PLTR over 154.5. And then the last one is UNH. UNH is one of my favorite setups out there. This is my up next setup. When we looked at Hood last week, and I was talking about how Hood should break, if it looks like it's going to break $80, you got a gap fill. When I was talking about Amazon last week, and I said, Amazon, if this breaks 211, you get the run to 213 very easily, and then you start to look for the gap fill. UNH is in that same category. UNH is the next Hood. UNH is the next Amazon. This is the same, it's almost the same exact setup. A stock that is sold off on the daily. It's multiple rejections of a static point of resistance at 295. Break of 295 runs us to 300 very easily. And then above 300, you've got a massive gap all the way to 345 plus to be filled. So there is a ton of profit margin available here. But we need confirmation before we can take this trade. And that confirmation will be on a break of 295. Now, where UNH is opening at, or where it's trading at rather, and likely to open at right now, it doesn't feel like it's going to get to 295 and beyond today. It has made, it's opened from this price point before, and it has made runs to 295. And you see every time it opens and runs in this area to 295, buyers are exhausted, right? So I don't think that we put UNH on the watch list today. It's a really great setup. I'm ready to trade this if it's going to go, but I just don't feel like I don't think it's in play today. From here up, again, 1.7% move. UNH is not known as a big mover typically. So I think that we omit this from the list, but don't get it twisted. This is not me saying don't watch this setup in the future. I just don't think that it's going to be in play for today. So make sure you have your alert set at 295. I already do. Maybe you want to set another alert at 294 just to remind you that it's on the way up. Because if and when this gets there, this is going to be a trade that offers us a lot of opportunity. But I just don't know with the gap down this morning that it's ready. I just don't know. All right. So now we need to figure out what we're going to do with these. So let's put these let's do a quick comparison. So we know AMD, PLTR, and Apple are making the list. We don't know if we want to include Meta or Nvidia. So let's take a look at Meta. I think I like Meta over Nvidia, but Nvidia can be really surprising. If Nvidia makes a move like this, it can certainly give us what we're looking for. That's the only thing keeping this on the list right now. Tell you what, let's roll through everything else and see if there's anything that looks better than those two. And if not, we'll just keep them both on the list. Okay, so TTD, the trade desk, is up. Usually I don't trade this name. This is not one that I normally day trade, because you see the 5-minute time frame there with the doji candle. During the day, that's typically a sign that this is like algorithmic trading. But with the gap up this morning, let's see, what is this news? Okay, trading higher after reports surfaced about potential advertising discussions with OpenAI. Okay, so yeah, this is investors reacted after news indicated that OpenAI may initially rely on external partners to sell ads as it scales its advertising business after introducing ads on ChatGPT last month. So news like this, especially with AI, which is a big thing right now, can increase the volume, which would make it less like algorithmic trading, and more retail would be interested in something like this. Oh man, this stock is really beaten up on the daily too. And it's trading, what do we say, at 30? The next resistance is 35. There's so much profit margin available. But this gap up is massive. I mean, this is a 22% move in the pre-market. It's I don't know. It looks good, but I think it's too much for me. That a 22% gap up is huge. That's massive. So Hope I don't regret it, but I'm going to leave it alone. If you like this, you can trade it. It would just be a long above 31, easy, right? Or long above whatever the pre-market high winds up being. All right, let's keep rolling. So when I'm going through these, I'm flipping through these charts really quickly. Don't get lost. What I'm looking at is right here. I'm just looking at the most recent price action. And again, we're on the 5-minute time frame. I'm just looking at the most recent price action, and I'm looking exactly for something that looks like TTD, something that looks like it's maybe gapped up big time or gapped down big time, something that maybe I might have missed, right? Something that just looks different from everything else. And so we can just go through these really quickly to find that. Somebody said there's big spreads on TTD. That's probably true because it's not one that, like I said, has a lot of volume typically. It looked like it's mostly algorithmic trading, but with the news this morning, options contracts and spreads, they don't update overnight. They update after market open. So you may want to check on TTD. If you're an options trader, you may want to check on TTD's options contracts after the open, because surely with a news catalyst like that and a 20% move up, there will be a flow of volume. There will be traders that see that and want to trade that. And because of that, that volume will increase, thus increasing the open interest on the contracts, thus not increasing the spread, but making the spread tighter as those traders negotiate a little more fairly about what the price of those contracts should be. And that's DoorDash that was up. I don't really like trading DoorDash. It doesn't have clean price action typically, so we're going to skip that one. Okay, I don't think we're going to find anything that looks better than what we have. So we are going to rock with our, Webull had earnings. Okay, really didn't move too much. Yeah, I'm interested in Webull if it can get back above $10, but until then, it's pretty much a dead name. All right, yeah, I don't see anything that looks better than what we have. So let's edit this list just a bit. So we're going to move AMD here. I'm going to say long over 202 because I know for sure we want to trade AMD if it moves. And we're going to say continuation watch following yesterday's run and reclaim of the 200 whole number after the bounce off of the 200 EMA. So we know AMD is going to make the list, and then we go Nvidia over, I think we're just going to leave both of them on the list here just in case. So Nvidia over 184.5, yeah, that looks good. So we can delete the question marks there. And then we got Meta over 668. And so we can just change this to a dashed line so we know that that's our price target overhead. So Meta over 668, and then we don't have a placeholder there. So this is your full watch list. Let's make sure these levels are good before we get it posted. So we're going to go SPY, long at 687, short at 680. Both of those look good. And then I'll make this a dashed line. 675 is that support on the daily. So we're going to make that a dashed line because we know that that's our price target below if this sells off. Then we got Amazon as a continuation watch. Top side, this is probably going to be my top stock pick of the day because it's not as gapped. I mean, it's a gap down, but it's not as gapped down as some of the other ones. And it was one of the biggest movers yesterday. So I think Amazon's our top pick of the day. Then we've got Hood for the continuation gap fill above 84. We'll turn this into a dashed line so we know that that's our price target. And then short below 80, we'll get rid of that. So there's your two lines for Hood. Both of those look good. Then we got AMD above 202, yep. And then Nvidia over 184.5, yeah, we just looked at that. And then PLTR above 154.5, Apple below 260, and then Meta over 668. So our two names that I would even consider taking short today is going to be SPY and Apple. So Apple would be my top stock pick to the short side. If we see a bearish market sentiment and everything's selling off, Apple's going to be my pick. Otherwise, I really like the setup on Amazon. That's my, without a doubt, that is my number one pick going into today. Plus, there's still plenty of gap for this to fill up to 220, and I'm sure that traders got FOMO missing this move yesterday, and they want to run it again today. So Amazon top stock pick long, Apple top stock pick short. There is your full watch list. All right, we are trading live this morning, and let me show you how to navigate there in case you don't know yet. In the Discord server, we're not trading live on YouTube, but in the Discord server, scroll down, bottom left-hand side of the server, all the way down, 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 down. You're going to see a voice channel heading and the arena, and then you'll see people here in the arena. Click on the arena, join into the arena, and I will meet you there in about 10 minutes. That is where we will conduct the live trading for today. And I'll get this watch list posted right now for everybody. All right, thank you so much for your time. If you're late to this stream, you missed some of it, but that's all right. It is available for you to play back from the very beginning, and you have time now before market open to get through the whole thing. Just put it on like 2x speed. Good luck today. Wait for your confirmations, right? These are not price predictions. I'm not saying, you know, Amazon long above 217.5. I'm not saying I think Amazon's going to run today and break 217.5. That's not what I'm saying. What I'm saying is if Amazon runs and if Amazon breaks 217.5, then I take the trade. If that criteria is not met, then I don't take the trade. So don't just buy at the open under the assumption that these stocks are going to move. That is injecting a bias into your trades, and you don't want to do that. Trade what you see is happening, not what you think is going to happen. Good luck today. We'll see you over in the Discord server for the live trading. Cheers.